Good evening, good afternoon, wherever you are. Welcome to the Accendo Trader Group. This is our weekend wrap-up trading plan for September 5th, 2009. Our website is blog.accendotraders.com, where we put together effective video trading plans on a daily basis. Here's some of the things that we think are important to developing your own personal trading plan, things that will help you prepare for the next trading session. However, we think it's most important by having a trading plan that you have time to spend with your family. So let's take a look at the week that was. We had for the first time the market ending down for the week. That's the first time in a while. But positive, we are still up for the year. We're still up very strong from the bottoms of March. And we've been talking about for the past 2 weeks that it looked like the market was losing some strength and that we were at a nice place for a pullback. So the question is the sentiment changing? September is historically the worst month for our stocks. And we had good economic data, but we really didn't see that traded that way. Is the good news already priced into the market? Normally, when bad news came out for the past couple of weeks, we rallied, and now we had good news, and we really didn't do anything. ISM showed expansion. Chicago PMI was greater than expected. Pending home sales for the 6th straight month showed an increase. So we had this good news, but we basically consolidated for the week. And then on Friday, we had a mixed employment data. We had the job loss number lower than what expected, thus making August the smallest job loss since 2008. But yet we saw unemployment rise to 9.7 instead of the 9.5 that was expected. And of course, on Friday we had light volume because of the shortened trading week. Monday is a holiday, so what does that mean? Where will the market go next week? Well, we don't really have a lot of economic data to guide the market, to push it one way or the other for traders to react to. And we also have no earnings this week to really react to. So we're going to have traders coming back from the holiday, and really either they're going to impress upon the market a sentiment, or we're going to continue in this consolidation range because there is nothing coming down the pipes as far as expected data to move the market. So as we begin to look at the charts, we're going to start off with the Dow. And what do we see? We see that the market a couple weeks ago came down, tested the 20. This certainly was a healthy pullback, and we pushed higher and made a new swing high. And now when we came back to test the 20 again, we did break a little, but here we are pushing. So the question is, next week, are we going to make a new swing high? Are we heading higher above last week's and 2 weeks ago's consolidation high? Or are we going to pivot down here from 9,500 and maybe head down to the 50? That again, with no news, what's that going to be? And you can see as the volume died, you can see the sentiment really is there is none. Going to the Nasdaq, same thing. The Nasdaq had this one quick bust out breakout day, and it came right back into this consolidation. August really was a real nice consolidation. A quick breakout to the bottom, quick breakout to the top, but we really have stayed in between this range of about 2100 down here to about 1950. Moving over to the S&P 500, same thing as the Dow. Last week we broke above the consolidation and came right back into it this week. Healthy pullback, move up, healthy pullback. Are we going to make a new swing high? Are we going to break down to test the 50? Now, again, this is a quick review of what we were looking at for the past couple weeks is the monthly chart. And you can see we came up to this moving average, and that's a natural place to pull back. Dave Elliott calls these ice hole failures. So here is the Dow having a failure at the 20, the Nasdaq having a failure at the 50 moving average, and the S&P 500 having a failure also at the 20 moving average. So what's going to happen for the rest of September? What's going to happen this week? Again, what will the market traders do with no news to move them? So as we talk about this consolidation that's going on in this range that we've been trading in for the past couple of weeks, last week we talked about how although we had moves up and down, the breadth basically was blah for the whole week. Now look at this week. You can see the breadth was negative for the first couple of days and then turned positive. But you can see that the volume on the volume dropped off tremendously as the week go on. Strong volume, and then we just kind of died off. Obviously Friday very dependent on the fact that it was a holiday and a lot of people left around 1. So again, um, breadth was kind of negative, turned positive, and then it's hard to track in what's going on with Friday because of the holiday. So again, internals I still think are showing us that we are still waiting for sentiment. They're not really showing us anything and what's going to move the market in this upcoming week. So let's go ahead and take a look at our sectors and see if anything's jumping out. When we were looking at our sectors, last week we were talking about how they were already leading us down. And now we can kind of see that they're showing a bounce, or not a bounce, but to show it that we hit a support. Now, remember, as I was talking about this, the indexes, I said, are we going to bounce to make a swing high, or are we going to go lower? Well, the sectors are kind of showing me that we found support and we may go somewhere. Doesn't necessarily mean we may make a new swing high, but we're definitely seem to be heading out. Could be heavily swayed by what happened on Friday. But look at the metals. Metals, probably one of the strongest sectors. Not lagging down here. Metals have already made back to the swing highs. So metals, you might look at some of the metal stocks, either A, play to break out higher, or see if it pullbacks. Check out gold. Gold is definitely a inverse of the market as the market consolidated. Look how gold just shot up there. Financials, we know, lead the market, kind of bounced off the 50. Again, talking about what we saw last week of the market, the sector is already heading down. Now we're potentially seeing that the sectors are ready to go back, at least hit the top of the range. I'm not calling a breakout, but at least hit the top of the range. Resorts already hitting the top of the range. So as we continue on with the book Trading in the Zone by Mark Douglas, and we're talking about the emotions of trading and the uncertainty principle. And last we talked about how the best traders evolved into a point to where they're not in an internal conflict over each trade. They simply believe anything can happen. The market could go up from here, the market could go down from here, the market could go level from here. Anything can happen. And they're not trying to predict things. They're not trying to emotionally battle the market. It's having a trading plan with entries and exits. So when your entry comes up, you're able to seize the now moment of that entry and click to trigger. By preventing the association of past trades and keep your mind free of unrealistic goals, I'm going to make 100 points, 100 ticks on every trade. I had to get over that. When I switched from options to futures, options, you want to make $1. You want to see the stock move. Whereas in futures, it's all about a tick trading plan. I want to have 40 points by the end of the day. You're not looking for the home run every time. And so by getting rid of these unrealistic goals and changing your mind and not worrying about how the market's going to express yourself, professional traders, successful traders are able to, again, focus on the now moment. And as Mark Douglas says, they're able to make themselves available to take advantage of whatever opportunities the market provides. The market goes up, great. I've got entries for that. The market goes down, it's great. I got entries for that. The market goes sideways, I've got entries for that. So, it's sort of like dating. Go back to your college days, your in the bar days, and, you see that attractive person across the room. Are you going to allow whether or not you got a drink thrown in your face last time affect whether or not you're going to go over and talk to that person? Or you're going to take advantage of that person smiling at you and go make yourself available to rejection? They may be smiling at the person next to you. Who knows? But the best traders are able to focus on the now and take advantage of their opportunities. So guys, our blog is blog.accendotraders.com. You can follow us on Twitter at twitter.com/accendotraders. And this week's 5 Good Minutes is with the Yamini Attic. Yamini Attic has a really good trader called called Ambush Trade. So let me show you what that is. 5 Good Minutes is with YaminiAttic.com, and let me show you what that is. So here we are at YaminiAttic.com, and some real good information here. I even like to watch his daily analysis. But go over here to Getting Started, and there's some real good information here. He likes Thinks or Swim like I do. But scroll right on down here. You can see here's Ambush Trades, and you can click and watch these videos on how he defines. Basically, he redefines Fibonacci's to define what an ambush trade is, and he has some good videos going through, how he sets it up. So spend 5 good minutes here at Yamini Attic and look at the ambush trades and some of the other videos he has there. Pretty good. Thanks, guys, and I will see you next time.